Everyone talks about gold. Buy gold, hold gold. Gold is the ultimate safe haven. And look, gold is fine. But here's what nobody is telling you. For centuries, across empires, wars, inflations, and total economic collapses, there has been another asset class that has quietly, consistently protected generational wealth, often outperforming gold. And most people scrolling their phones right now have completely overlooked it. We're talking about land, real, physical, productive land. And before you click away thinking this is basic, stay with me. Because the history here is extraordinary, the data is compelling, and the way smart money is moving right now might genuinely change how you think about wealth preservation. Why gold gets all the attention? Gold has a great marketing story. It's shiny, it's portable, it's been valued for over 5,000 years. When inflation spikes, people panic, buy gold. When currencies collapse, gold gets the headlines. In 2020, gold hit an all-time high of over $2,000 per ounce. In 2024, it crossed $2,700. But here's the thing about gold. It just sits there. It produces nothing. It generates no income. You buy it, you store it, you hope someone pays more for it later. Warren Buffett himself said it plainly, gold doesn't create anything. It doesn't earn, it doesn't compound. Now compare that to land. Land, the silent wealth preserver. Go back to medieval Europe. The aristocracy didn't store their wealth in coins, they owned land. Feudal lords, nobles, the Catholic Church, they accumulated land aggressively because they understood something fundamental. Land cannot be manufactured. Nobody is making more of it. And whoever controls productive land controls the food supply, the rents, and ultimately the power. The church alone, at its peak in medieval Europe, owned an estimated 30% of all land on the continent. That wasn't an accident. It was a deliberate, centuries-long wealth preservation strategy. Fast forward to the British Empire. The landed gentry, aristocratic families who owned vast rural estates, maintained their wealth through wars, currency devaluations, and political upheavals for generations. Why? Because the land kept producing crops, timber, rents, income, year after year, regardless of what the economy was doing. The data that should make you stop and think. Let's talk numbers because this is where it gets real. According to a landmark study published by the Federal Reserve Bank of San Francisco, which analyzed returns across 16 developed economies going back to 1870, residential real estate delivered average annual returns of approximately 7%, nearly identical to equities but with significantly lower volatility. Gold, over that same long-run period, has averaged returns closer to 1% to 2% annually in real inflation-adjusted terms. Read that again. Over 150 years of data, land and property, nearly 7% annually. Gold, closer to 1% to 2% in real terms. And farmland, specifically the NCREIF Farmland Index, which tracks US. Farmland investment returns has shown average annual returns of around 10% to 12% over the past 3 decades, combining both appreciation and income from crops. It has never recorded a negative decade. Not during the dot-com crash, not during the 2008 financial crisis, not during COVID. The scarcity argument and why it's getting stronger. Here's where the case for land becomes almost impossible to argue against. The world's population is projected to reach nearly 10 billion people by 2050. We need to feed those people. But here's the brutal truth. We are actually losing arable farmland. Urbanization, soil degradation, and climate change are shrinking the amount of productive agricultural land available globally. The UN estimates that nearly 40% of the world's land is already degraded. Supply shrinking, demand exploding. That is the textbook definition of an asset whose value is structurally positioned to rise. And the smart money already knows this. Bill Gates is now the largest private farmland owner in the United States, with over 270,000 acres across multiple states. institutional investors, pension funds, sovereign wealth funds, private equity have been quietly pouring capital into farmland and timberland for years. They're not doing that for fun. They're doing it because the math makes sense. Land versus gold in a crisis. What history actually shows. Let's stress test this. In the Weimar Republic hyperinflation of the early 1920s, German currency became worthless almost overnight. People who held gold did preserve some value, but people who held farmland, they were fine because they had food. They had something tangible that other people desperately needed, regardless of what any currency was doing. In post-war Japan, in post-Soviet Russia, in Zimbabwe's hyperinflation, the pattern repeats. Productive land retained value or recovered value faster than almost any other asset because at the end of the day, human beings need to eat. Gold is a store of value. Land is a store of value that also produces value. That distinction is everything. The accessibility question. Now, the fair objection is this. Gold is accessible. You can buy a gold coin for a few $100s. Buying farmland sounds like something only billionaires do. And that was true. But it's changing fast. Platforms now exist that allow fractional farmland investment. Companies like Acre Trader and Farm Together in the US allow everyday investors to buy shares of actual farmland for as little as a few $1,000s, earning both rental income and appreciation. REITs focused on farmland and timberland, like Farmland Partners or Weyerhaeuser, are publicly traded and accessible through any brokerage account. The barrier to entry is lower than it has ever been. Gold has a great story, but land has a better history. And in a world of rising populations, shrinking arable acres, currency, uncertainty, and institutional capital quietly repositioning, the centuries-old instinct of the wealthy might just be the most rational financial strategy available to the rest of us, too. The wealthy have known this for centuries. They didn't put their faith in a shiny metal locked in a vault. They put their faith in something you can walk on, farm on, and build on. And while everyone else was chasing gold, they were quietly accumulating the one thing no government can print, no factory can manufacture, and no algorithm can replicate. The question isn't whether land works as a wealth preserver. History already answered that. The question is, how much longer are you going to wait before you start paying attention?